Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Tuesday. We're at the 10th of September, 2019, just after 3:30 p.m. Central Daylight Time. Well, the event of the day is interesting because you were up sharply in the grain markets, as you could see, and I don't know what the reality is other than saying two things. Number one, John Bolton, our White House one of the advisors to the president, that you know, he's the hawk. He is out. Now, whether he was fired, resigned, I'll let everybody else worry about it. The important thing is that he's out. And with that importance, so goes a hawk. Now, the question is, the market is biting onto this, thinking that since China, somehow word leaked that they're ready to buy more U.S. goods, they're throwing that back on the table. Is that what's behind today's rally? Is behind today's rally people getting out of the markets on a long extended downtrend in front of Thursday's WASD report, where we're going to see supply, demand, and what's going on with everything? I don't know. I do know that removing a hawk at this point before you're in October negotiations, people can run with that, and that's been the case. So we were down in the NASDAQ today, but up in all the other stock indices. Gold and silver continue to weaken. The dollar up a fraction as we go, and of course the grain market's up, and pretty much unchanged as you're looking at it in the energies. The question in natural gas, when does the market run out of momentum up here? In the soybean chart, we did get a little bit of a change. You now, on a closing basis, are now starting to see higher lows and higher highs. That means that if I had a swing line on just closing prices, it would be pointing up unless you get back under the 843 level. Where could the market lead this rally to? Well, the 18-week moving average of closes is about a dime higher in the 869 zone, so that could be where the market wants to rally up to figure out what next. More important to me is this chart picture I've been working with you on for the past week or so. This is the downtrend line that I think is at work. You can see the market rallied back up to it today and stalled out against it. You got to 874 3/4, finished the day at 872, pretty much on that line. The key is to get over these numbers, and those numbers, if you're interested, would be getting up and over this high, which was 879.5, and I could consider then that the market is attempting a breakout of this downtrend that has been in place, and that to me is a classic chart, a falling wedge. When we look at the swing line itself, you're neutral. You've been this way for a bit. You have a higher high and a lower low pattern. That lower low is made back here, so about 3 days ago. When we take a look at the battleground, the 18-day average of closes certainly comes into play. You've been either side of it for a while, not able to mount much of a serious decline or a serious rally. If the market can rally more and clear this 879.5, then the 886 3/4 number, the 100-day moving average, comes into play. But where's the Bollinger Band? Because that's another resistance point. And since that is underneath it, that's the real number. And it's interesting, it's coming in around the 879.5 zone, that number that I said. Can we clear that last high? Now, that's probably going to drop a tad tonight, just the way that the math goes of this. But more important to me is what's going on. We're going pretty much sideways against the lower Bollinger Band, unable to extend the break. The rally points, we'll see if the resistance could be broken if you can get up to the upper Bollinger Band. At least then I have another target of 886 3/4. Is this an important low? We don't know yet. We have to wait and see. In terms of momentum, it's up. So I have the bias up as the market closed over the 18-day average of closes. I always look to see where the close is in relation to the 18-day average of closes, and I define bias if it's over or under it. Momentum, I think you can clearly see, is moving to the upside. Resistance, 879.5, and no, the swing line isn't trending just yet. In the meal market, the battleground has been the 18-day moving average of closes, and it's been that way for the better part of a month. The market has worked itself into lower lows here, but each time it does against the Bollinger Band, it pops, and it's been making a regular habit, at least on this past couple of weeks, where it's getting back to the 18-day average of closes. Are we trending? The answer is no. You've had a higher high, a lower low, and you keep fighting right here. What I think's going on is you're taking this action and you're starting to go sideways. You have an oversold market that is attempting to correct that in front of Thursday's important report. In the soy oil, the 100-day average is what came into play. It came into play all the way back here, got under it, then kept challenging it, finally got back to the 18-day average. The trend is down as you've got lower highs, lower lows. And as I said yesterday, you play for that last point to be hit. You missed hitting the Bollinger Band yesterday by 3 ticks. A lot of pros don't do that, especially when the market's oversold, and all you've done is come back to that 100-day average. The more important thing is, what do you do if you're going to put on positions now? Do you want to go through that report on Thursday? I'll leave that up to you. In the corn market, I look at this. You lost the embedded reading. Now, this is the first time you've lost it since all the way back here when it was created. You can get it back the next day if prices drop sharply. So this market would have to do that. We haven't broke the downtrend in terms of lower highs, lower lows, but we hit that lower Bollinger Band. It let, in my opinion, the pros an opportunity to come out. Now, if you take out 362 3/4. Today's high was 362.5. You put into play the 18-day average via the lost embedded reading. You'll break the swing line. And the question is, do you go into a bigger chop affair from high to low of the Bollinger Band? Again, you've got that Thursday report. The wheat market, and I think I said this the other day, was the market to turn bullish first. It did so when you had the higher low, higher high over the 18-day average. That put the bias up, the momentum up, the trend up. If the market wanted to continue up, the targets, wherever that Bollinger Band is, today that Bollinger Band is 484 3/4. You got to 483.5, so not a bad play on what's going on. Clear that number, you've got a 498 level, but you're already overbought. The first challenge of a Bollinger Band is often where pros take off money in the market. And yes, you can have all the news about China. They can say they're going to buy. Let me tame that back. They've said that for a long time, and they don't buy what they say. They talk a lot. They don't perform a lot. In the sugar market, you've got lower highs, you have lower lows. You have an embedded reading. That's the makeup of a bear market until this red line, just like in the corn, closes back over 20. I say the pros are selling this market on these rallies and trying to cover at Bollinger Band when given the opportunity. In the coffee, we just talked yesterday. This is the first time coffee was able to get up and get to an upper Bollinger Band in a massive period of time. I'm talking a couple of months. That's a sign of strength. Now, if it continues, and that's the big question, do you get to the 100-day average? More important, I'll stick with what I say. Generally speaking, when you first hit that Bollinger Band, be it to the upside or downside, pros take some money off the table. Today, the market opened steady to lower, dropped back, then made its rally, and now it's headed, I think, towards that 100-day average. But more important, I think you're going to see chartists saying maybe, just maybe, we've seen a bottom in coffee of importance, and yes, you're getting a nice rally. Now does it pull back and let people take a nibble at it? In the cocoa market, we are overbought, keep running up, making a higher high. We did that. We're backing under Bollinger Band, so you hit it, you back off, you hit it, you back off. That's been the pattern here. Overbought, market extending up, but I think into an area where it's already hit some upside targets. It's going to need a piece of fundamental news, I think, to make a run. The one thing I've been saying is I think cotton, with this spinning around in sideways action, is catching traders back and forth. Why? Because you're not following through the up or the downside. Yesterday you were down again, had no follow through to it. Today you're back up. Will you get follow through over these highs? You might. For the first time in a while, we have a pattern of higher lows and higher highs, so you have the trend up, you have the bias up, and momentum is pointing up. Can the market do anything with it? Well, it could, but it's already overbought. You've got a 70 reading. So I still think that first challenge of Bollinger Bands is where pros take a look. Will they take everything off? When you get this pattern, They often don't. Why? Because this is what you look for, that sideways basing action to see if something can work higher, or sideways topping action if you come out the downside. You get chopped in between there. It's very typical. In the cattle market, as soon as we heard that John Bolton had lost his job, all meats, because I was looking at this, I was looking at soybeans and meats when that happened, they bounced away. But to me, it was not a surprise. You were 2 days under the lower Bollinger Band. The odds of staying under a Bollinger Band 5% of the time, and I have a teaching method where each consecutive day under takes away one of those percentage points. Does it always work? No. It's a rule of thumb. And when we go today and look at some of the other markets, we'll see that you can get away from that in different areas. But it happens. But I'll stay with the percentages. And that's what trading's about, the percentages. The market is still in a bear trend, but the odds favor it's going to get over the Bollinger Band. That's what it did today. It's an oversold market where the pros could have come out in the first area here. Did they leave any real money on the table? I don't think so. Resistance back up at 98.65, but it's very oversold. I don't know that people are going to do an awful lot with this one way or the other. In the feeder cattle market, you did the same thing. If we come back here, you challenged the lower Bollinger Band. That number was 129, let's call it 18.5, and the low was 17.5 right here. Did you really leave any money on the table? Yeah, it was under it there, and it's right back up. I'll stick with what I teach. Now, the resistance back at the 18-day average of closes, take out 133.67.5. In this whole leg then of this downtrend is over. Does that mean there's a bull market ready? Well, it certainly is not going to be bearish if that's taken out. In the hog market, today, you got back to the lower Bollinger Band. What would I tell you? You have a market that's pointing down. You have no trend. The bias is down. You've got somewhat of a sideways market. If you get to that number, I think the pros will step out. The market got down and came right back to the 18-day average of closes, as you could see. So if you got out at that lower low at 60.22, you were feeling pretty good by the end of the day. You're saying, boy, I got out 200 and some odd points ago, and it stopped right back at that 18-day average of closes. So interesting day, a lot going on. The Bolton take the, if you will, the firing, the letting go, whatever took place because of the Taliban, why not? Who came up with that stupid idea to invite the Taliban just before tomorrow, the anniversary of 9/11? This is beyond me. I don't know where the thinking comes from, but somebody's head should have gone. It's an insult to all of us. In any case, let's talk about what I have out there. And remember, when I put out a special report, they're video reports. I cover a lot of charts in them. They're only up for 5 business days. They're not about a history lesson. They're about what's going on right now. So if you want to see the report, you go to our website at www.iraepstein.com under the word education at this point. You'll see Ira's Metal Report. Click on it and you can see it. I cover both seasonal charts in the gold. I'm going to cover for you price counts, which we hit. You hit your final price counts and you've been pulling back. That's not necessarily a bear sign. It's that that leg of the market might have ended. Then quarterly, monthly, weekly, and daily charts. And we are down to some interesting areas on these charts. And you know we've had a one-sided trade to the downside recently. We'll see what that all means. So if you want to see the report, I invite you to do it. I'm Ira Epstein. I'll see you tomorrow.